Hello, I'm Kate Stichina and welcome to InstaForex TV channel. On Thursday and Friday, traders are alert to interesting market-moving events. Thus, could change market sentiment crucially. Let's discuss them in details in our video calendar on InstaForex TV channel. The market is anticipating a policy update of the European Central Bank. The regulator is widely expected to leave the key interest rate at a zero level. Traders will focus their immediate attention on policy statements at the press conference. The ECB president is likely to highlight a slowdown in the Eurozone's economy, sluggish consumer inflation, outside risks and other headwinds which overshadow an economic outlook. And in this context, the forward guidance could signal that the central bank is going to delay the expected timing of the nearest rate hike until early next year. Such a policy review will trigger sell-offs of the euro. Recently, the euro has been able to assert its strength because of the ECB intention to tighten ultra-loose monetary policy. Another reason behind the euro's advance is the weakness of the US dollar, and the greenback could lose ground again. On Friday, the US Labor Department is due to release data of major importance. Non-farm payrolls for January came in beyond expectations. So the market is ready for upbeat data. The bullish sentiment accounts for robust demand for the US currency in the first half of the trading week. However, analysts share a conservative viewpoint, projecting 185,000 new jobs in the United States private sector. Yesterday, ADP National Employment Report suggested that the pessimistic forecast could come true. A patch of data on the US labor market also includes information on an unemployment rate, which is expected to edge down to 3.9% in February from 4% in the previous month. Besides, data on changes in average hourly earnings is the subject of special attention, which is mainly responsible for market sentiment. Wages in the United States could have gained 0.3% in month, thus increasing an annual growth rate to 3.3%. Higher wages boost consumer activity, inflation, and make the domestic economy ready for a rate hike. In other words, if average hourly earnings grow in line with expectation, the US dollar will resume a rally. Apart from the above-mentioned events, it would be a good idea to bear in mind other important data which is due until the weekend. On Thursday, the United States will present more data on the labor market, such as unemployment claims and labor costs. However, this information will hardly impact on the market compared to the significant non-farm payrolls which are due on Friday. Nevertheless, any strong data could be a good excuse to increase long positions on the US dollar. On Friday, Canada will also release data on the job market. During the European trade, Germany will present data on factory orders. The economic calendar will not exhaust economic data. On Saturday, China will report on consumer and factory inflation. Forecasts are rather pessimistic. It would be a good idea for traders to leave for the weekend with long positions on several assets, like the US dollar, the yen, or the Swiss franc. You were watching Forex Trader Calendar on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals.